Hello everyone, welcome Lead School at Home. We have started third chapter of economics in unit third, that is money and credit. In this chapter we have studied money as a medium of exchange, then modern forms of money. Now we will see the next point in this chapter, that is loan activities of banks. Please student, put your textbook in front of you while watching this video and be ready with your pen, pencil and notebook. These questions I think you have completed in homework. Now we will move towards the next point, that is loan activities of banks. Let us take the story of banks further. Now we will see how bank play an important role as an intermediator. What do the banks do with the deposits which they accept from the public? Means what bank do when depositors deposit their money into the bank. There is an interesting mechanism at work here. Banks keep only a small proportion of their deposits as cash with themselves. If depositor deposits, then only bank hold small proportion of the depositors cash with themselves. For example, banks in India these days hold about 15% of their deposits as cash. In India, banks hold only 15% of the depositors cash. This is kept as a provision to pay the depositors who might come to withdraw money from the bank on any given day. Since on any particular day, only some of its many depositors come to withdraw cash, the bank is able to manage with this cash. I have told earlier that only 15% of depositors cash bank hold, and this percentage will kept by bank, and a remaining amount will pay to the depositors if a depositor come to the bank to withdraw money from his account on any given day. Since any particular day only some of its many depositors come to withdraw cash, that time bank is able to manage with this cash. Banks use the major portion of the deposits to extend loans, and major proportion banks extend to loans. This is a huge demand for loans for various economic activities, and that loan used for various economic activities. We shall read more about this in the following section. See how it works. Banks make use of the deposit to meet the loans requirement of the people. Means those loans means cash banks kept with themselves. Those rupees banks make use of the deposit to meet the loan requirement of the people. In this way, banks mediate between those who have surplus funds, means the depositor, and those who are in need of these funds, means the borrower. See here with the help of diagram, depositors, people who deposits in the bank, bank only hold 15% and remaining amount to pay people who want loans, means people take loans, and these are the borrowers from bank. Banks make a higher interest rate on loans than what they offer on depositors. When bank provide loan to the borrower, that time banks charges a higher interest rate onto the borrowers. The difference between what is charged from borrowers and what is paid to depositors is their main source of income, and what they have charged to the borrowers and what is paid to depositors, and that difference is the source of income to the bank. See here, I have told people make a deposit in banks, then banks provide loan to the people, then again bank will take, people repay loans with interest. I mean, banks will take interest and give some interest to the depositor on their cash when they withdraw money. People make a withdraw and get interest from them, charges higher, and give them some lower interest, and remaining difference is the income source of the bank. Suppose if you are not understood in this way, I will tell you in this way, that is now here depositors are there, bank is there, and borrower is there. Suppose borrower deposit 100 rupees into the bank, banks hold only 15% and provide money, remaining money to the borrowers. Here means 85 rupees as a loan. When banks give the loans to the borrowers, then it charges higher interest rate, and bank again give money to the depositor at a lower interest who deposit the money. Now here suppose bank charges here 5% to the borrower, and bank give only 3% to the depositor, and the difference is 2%, and 2% is the income of the bank. Income of the bank. I hope you will understood it better. Now we will move towards on the next page. Now the next point is two different credit situations. A large number of transactions in our day-to-day activities involves credit in some form or the other. In our day-to-day activities, we will do transaction. It involve in credit form or the other. Credit means loan, refers to an agreement in which the lender supplies the borrower with money, goods, or services in return for the promise of a future payment. And in this, lender provide a borrower money, goods, or services, and in return for the promise of a future payment from borrowers to the supplier. Let us see how credit works through the following two examples. Now see how credit works in the following situation. First is festival season. It is festival season 2 months from now, and the shoe manufacturer Salim has received an order from a large trader in town for 3,000 pairs of shoes to be delivered in a month time. Now festival season is there after 2 months, and for that festival season, shoe manufacturer Salim has got an order from a large trader in town of 3,000 pairs of shoes to be delivered in a month. To complete production on time, Salim has to hire a few more workers for stitching and pasting works. And to complete this work, Salim, who is a shoe manufacturer, has to hire employee for stitching and pasting for work. He has to purchase the raw material. and he has to purchase the raw materials. To meet these expenses, Salim obtains loans from two sources. And to complete this goal, Salim has two options. First one is he asks the leather supplier to supply leather now and promise to pay him later. First is Salim asks to the leather supplier to supply leather and he will pay him after later. Second, he obtains loan in cash from the large trader as an advance payment for 1000 pairs of shoes with a promise to deliver the whole order by the end of the month. And second source, he has to take advance cash from that large trader near about for 1000 pairs of shoes with promise it be will deliver the whole order by the end of the month. At the end of the month, Salim is able to deliver the order, make a good profit and repay the money that he had borrowed. And end of the month, Salim will finish his goal and he will give 3000 pairs of shoe to the large trader and take a remaining amount, and on that remaining amount he will gives money to the leather supplier who he has borrowed money in the form of a promise. He will pay now the rupees to the leather and he make profit. Now we will move towards the next situation. Now here the conclusion has given. In this case, Salim obtained credit to meet the working capital needs of production. In this way, Salim obtained credit to meet the working capital needs for his production. The credit helps him to meet the ongoing expenses of production, complete production on time, and hereby increase his earning. Credit therefore plays an vital and positive role in this situation. Now we will move towards the next. Second example is Sapna's problem. Sapna, a small farmer, grows groundnut on her 3 acres of land. She takes a loan from the moneylender to meet the expenses of cultivation, hoping that her harvest would help repay the loan. Sapna, who is a small farmer, she grows groundnut on her 3 acres of land, and to meet the expenses of cultivation, she has taken loan from the money lender and hoping that her harvest would help to repay that loan. Midway through the season, the crop is hit by pest and the crop fails. After some days, her crop hit by pest and the crop fails. Through Sapna sprays her crop with the expensive pesticide, and then Sapna sprayed her crops with the expensive pesticides. It makes little difference and it will make only some little bit help. She is unable to repay the money lender and the debt grows over the year into a large amount, and in this way she is unable to pay to the money lender and he went into the debt over the years into a large amount. Next year, Sapna takes a fresh loan for cultivation. It is a normal crop this year. Now next year, she has taken a fresh loan. Now in this year, her crop is normal, but the earnings are not enough to cover the old loan. But from this crop, she earned some money but not cover the loan where she has taken earlier, means old loan. She is caught in debt. Now she is caught in debt. She has to sell a part of the land to pay off the debt. And for that old loan, she has to sell the land and pay that debt. Now we will move towards on next page. In rural areas, the main demand for credit is for crop production. In the rural areas, the main demand for credit is for crop production. Crop production involves considerable costs on seeds, fertilizers, pesticides, water, electricity, repair of equipment, etc. And that crop production involves cost on seeds, fertilizers, pesticides, water, electricity, repair of equipment. These are there is a minimum stretch of 3 to 4 months between the time when the farmer buy these inputs and when they sell the crop, and there is a minimum stretch of 3 to 4 months between the time when the farmers buy these inputs and when they sell the crop. Now these inputs means these are seeds, fertilizer, pesticide, water, electricity, and repair of equipment. Farmers usually take crop loans at the beginning of the season and repay the loan after harvest. Farmers usually take crop loans at the beginning of the season, means in the month of May or June, and repay it after the harvest of a farm. A repayment of the loan is crucially depends on the income from farming, and that repayment usually depend upon the income of farming. In Sapna's case, the failure of the crop made loan repayment impossible. We have seen in the second case, that is in Sapna's case, she is the failure of the crop made loan repayment is not possible to her. She had to sell part of the land to repay the loan, and to repay the loan she sold her land. Credit, instead of helping Sapna improve her earning, left her worse off, and credit, instead of helping Sapna to improve her earning, but now she is worse off. This is an example of what is commonly called debt draft, and this is commonly called as debt draft. Credit in this case purchase the borrower into a situation from which a recovery is very painful, and in this case a recovery is very painful to the borrower. In one situation, credit helps to increase earning and therefore the person is better off than before. In the first situation, that situation helps to increase earning and therefore the person is better off than before. In another situation, because of the crop failure, credit pushes the person into a debt trap. And in the second situation, credit pushes the person into a debt trap. That is in Sapna's case. To repay her loan, she has to sell a portion of her land. And to repay her loan, she, in Sapna, sold her some part of land. She is clearly much worse off than before. Now she is clearly much worse than earlier. Whether credit would be useful or not, therefore, depends on the risk in the situation and whether there is some support in case of loss. and therefore depends on the risk in the situation and whether there is some support in case of loss. Next part we will see in next video. If you don't understand some parts in this chapter, if you have any queries, please tell your queries. We will solve it. Thank you.